Hi, I'm Jimmy, your virtual mortgage guide. Welcome to our channel. Thinking about refinancing your mortgage but not sure if it's the right move? You're not alone. Many homeowners wonder whether switching lenders or updating their home loan will actually save them money or cost more in the long run. In this video, we'll break down the pros and cons of refinancing, how to know if it's worth it, and what to look out for, especially if you're in Australia. Refinancing is when you replace your existing home loan with a new one, usually with a different lender, but sometimes with the same one under new terms. Homeowners refinance for a few common reasons: to get a lower interest rate, to reduce monthly repayments, to access equity in their home, to consolidate other debts, or to change loan features, like moving from a fixed to variable rate or adding an offset account. Sounds great, right? But let's weigh both sides. First is lower interest rate. This is the big one. If interest rates have dropped since you took out your loan, or if you've been on the same rate for years, refinancing could save you thousands. Even reducing your rate by 0.5% could mean tens of thousands saved over the life of your loan. Let's say you have a $500,000 loan at 6.5%. If you refinance to 5.9%, your monthly repayment could drop by over $180 and save you more than $65,000 in interest over 30 years. That's money you could redirect into investments, home improvements, or simply improving your lifestyle. Aside from just lowering your interest rate, refinancing gives you a chance to negotiate better features, like more flexible repayments, lower fees, or faster access to redraw and offset functions. With a better rate or longer term, your monthly repayments could drop, giving you more breathing room in your budget. Lenders are competitive right now, and if you've improved your credit or property value, you may qualify for better terms than you had when you first took out the loan. You will also have the access to equity. If your property has increased in value, you can refinance to access some of that equity to renovate, invest, or pay for major expenses. Next, you will have the loan flexibility. You might want to switch from fixed to variable, add an offset account, or change repayment frequency. Refinancing gives you those options. Last but not least, you can roll higher interest debts, like credit cards or personal loans, into your mortgage at a lower rate, potentially saving you thousands. Refinancing can be a great tool, but only when the long-term benefits outweigh the short-term costs. Imagine you have $20,000 on credit cards at 18% interest. Rolling that into your mortgage at 6% could dramatically reduce your monthly interest cost. But be cautious. You're turning short-term debt into long-term debt. So only do this if you can avoid racking up new credit card balances. Refinancing can help clear your debt, but only if you change the habits that caused the debt in the first place. Now, all of that sounds great, and in many cases it is. But refinancing isn't a one-size-fits-all solution. Like any financial decision, there are trade-offs. Before you hit that Apply Now button, here are a few important downsides to consider. If you're currently on a fixed-rate home loan, refinancing before the fixed period ends could come with early exit or break fees. These fees vary, but they can be thousands of dollars depending on how much time is left and how the lender calculates the loss. Always check with your lender before refinancing a fixed loan. The fees might outweigh the benefits. Moving on, even if you're moving to a better rate, refinancing isn't always free. You might face application fees, valuation fees, discharge and registration fees, and legal or settlement costs. While some lenders waive these fees as incentives, not all do. These upfront costs can eat into your expected savings, especially if you plan to sell or move again soon. One common refinancing trap is restarting your loan term. If you originally had 25 years left and you refinance into a new 30-year loan, yes, your monthly repayments may be lower, but you'll be paying interest for 5 extra years, and that adds up. One tip: consider refinancing into a shorter loan term if your budget allows. It can reduce your total interest significantly. Tapping into your home equity can be helpful for renovations or investments. But if you're using that cash to upgrade your car, fund a holiday, or cover other lifestyle expenses, you're just adding more debt. Equity release is not free money, it's a loan. Make sure it's going towards something that builds value. Let's be honest, refinancing can be a bit of a process. You'll likely need to provide updated payslips and bank statements, go through a credit assessment, Wait for property valuations and approvals. If your financial situation has changed, like reduced income, more debt, or missed payments, you might not qualify for a better loan at all. So when does refinancing actually make sense? Here are a few signs it might be the right move for you. If you've had your current loan for 2 to 3 years or more, interest rates may have dropped and lenders are more competitive than ever. If you haven't reviewed your loan in a while, you could be overpaying. If your current interest rate is at least 0.5% higher than what's available, even a small difference in rate can lead to big savings over the life of your loan, especially if your loan balance is still substantial. If you want to access equity for a productive purpose like renovations or investment, and not just for lifestyle spending. If you're looking to consolidate high-interest debts like credit cards or personal loans into one lower-rate mortgage. If you want more loan flexibility, maybe you'd like to add an offset account, switch from a fixed to a variable loan, or change repayment frequency. Refinancing can help with all of that. But here's the key. Refinancing only makes sense when the benefits outweigh the costs and the structure fits your financial goals. So before making a move, make sure to compare the savings, check the fees, and think long-term. So should you refinance? It depends. But the potential benefits, lower rates, better cash flow, and more control can be life-changing if done right. Just make sure you understand the costs, compare carefully, refinance for the right reasons. And if you need help deciding whether refinancing makes sense for you, we're here to walk you through it. Email us at finance@fortiscapital.com.au or call text +61 415 318 888. Don't forget to like, subscribe, and share this with someone who might be overpaying on their home loan. Thanks for watching. I'm Jimmy, your virtual mortgage guide.